Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, September 17th, 2025. So, the Fed cut rates by 25 basis points. Really said nothing again, and I'm surprised the markets didn't stay down more than they were. It was it's kind of hard to explain what he's looking at or what he's saying. I mean, the fact that he did 25 basis points, that I thought he was going to do some kind of a little shock and all, but I really do believe this is a he just doesn't like Trump at all, and he's going to go out in a blaze of, whatever you want to call it with him. But he's not going to do anything that Trump wants, and the rhetoric that now Trump's going to start going after him, I believe, is only going to start causing more volatility in this market. So really my scenarios were that he was either going to do 50 basis points and we were going to see the S&P skyrocket higher, most likely up to the 6650, 6700, 25 basis points, and said that we're looking to cut a couple more times towards the end of the year, and we would get a pop and probably not do anything. Or he was going to just do 25 basis points and say it's data dependent, which that was kind of what he said, but gave a few more leaks out that they're open for cuts. But no matter what it was very volatile. Believe it or not, I was positioned fantastic for it. We were long IWM and short the S&P, the SPY puts. And when we got the big pop up, I was able to close the IWM calls for a decent profit. And then I actually took the puts for a loss when it popped up because I thought we were just going to continue up. And unfortunately, it ended up coming down. We had a few of our stocks that I was in that didn't perform like I wanted it to. And we ended up taking a hit today. Nothing major. It was I believe it was like 700 bucks. Let me take a look. Yeah, so 735. Nothing crazy. Like I said, I was just more mad because we were positioned very good, and if I just held the put part of it on the spiders, we probably would have made close to like $5,000 today. But the Fed days are tough to trade. You have to be on your toes, and you have to it just kind of it just kind of close your eyes and look at certain pivot points and just go by those because it moves so fast. So what we noticed, this is a small option line right here. You can tell because it's really skinny. These are the more important ones here. So this is not that important. The 6650 was important. Then we had the 6600, which was really important in the 6550. So we came up, popped above it, came all the way down. You can see, touched this support at the 6550, bounced up and ended right at a call wall line there. So all of that movement with the S&P closed down 6 points, and like I said, it's really it was hard to trade. I was really banking on the market's moving higher because I was more heavy weighted with particular stocks, and they had a small pop, and I thought they're going to continue going, but then they started dropping when the S&P did, and I just really wanted to start the day with a clean slate tomorrow and go from there. So what do we go? What does this mean going forward? So you can see that we still have these bearish divergences in place on the 15-minute chart, but this drop right here, if I kind of zoom out right here, you can see that actually gave us a little bit of a bullish divergence. So the support level held and it popped up. Really what we have to go by is what really I think the 60-minute chart here, and this is the important part of it because you can see that we still have these bearish divergences. This little 1 hour drop is not going to fulfill that. So as much as we could head higher, I think really the anxiety of what's coming next is actually going to be a weight on the market, and it's not going to be any kind of backdraft. I think it's going to be more of a headwind because now people are not going to be sure what's going on, and really the entire trade was that the Fed was going to be backing the market, and this is going to keep things going. And the quarter point was priced in. So just removing 6 points off of that, I think there's going to be a lot more to go on the downside. But let's just, instead of trying to figure out exactly when this is going to happen, what we want to do is just keep an eye on what the resistance levels are. So we have the 6650. We know we actually can tell that from here. Hang on one second. Let me go to the S&P. And here you can see the 6650, 6700. Those are your upside resistance levels. And then if these lows get taken out, you can see we have the 6,500, 6,450, and 6,400. So those are really your support levels that we want to keep an eye on. And I'm on the side that if we get up to the 6,650, you start fading it, look for a drop. If it continues higher as we get up into the 6,700, you can start building positions on the short side with the S&P, meaning giving it some time. You buy some puts that are a month out. You're going to pay more for them, buy less. But I think a month, a few weeks is we're going to see the S&P trading somewhere down into the 66, somewhere down in these levels, possibly lower. So if you can just buy a couple of them, give yourself a few weeks. This is really where I believe that we're going to be coming, anywhere from the 63.50 down to the 62.11 area. So that would be my plan on it. And really, the main reason is the daily charts here, where we have these massive, massive bearish divergences. We had this quick move down. This is the hourly chart. I'm sorry. So we have these massive bearish divergences, found support at the 200-day moving average. But if this gives way, what we really want to keep an eye on. Hang on one second. I'm sorry. Let me. Okay, so this is the daily part on the S&P, and you can see we have these massive, massive divergences, very overbought. And again, this is a candle that this is not going to fulfill these bearish divergences. So you can see the first support areas coming in. It's support we have, obviously price support, but if we're going to look at what really traders have been doing, the 50-day moving average is down at 63.87. I think it's more likely we're going to come down and test the 200-day moving average. And really, the main reason for that is if we just go back, let me just make this a little bit further out and go 5 years. So in the last 5 years, you can see that. So let's just take this low. This is back in 2022. We rallied up, came down, touched the 200-day moving average, and then we came up. And as you can see, the longer that we go without touching the moving average, the quicker it came down. So this, we had the S&P that went from 56, 65, 66 down to the 51.50. So this was a huge drop in a fairly short amount of time. And that's kind of what I'm anticipating here, is that we are going to get that same type of move. It may only last a few weeks, but it also, you can see the S&P trading all the way down at the 60.21 level. And that's really the trade that I'm thinking that's in place right here. But obviously, we're going to find some buyers at the 6,400. But as I said, this move really, I would say from here, was anticipation that the Fed was going to be behind this market and it was going to take off. And I think Powell pretty much said he's not going to play this game. He's going to stick with, whatever information he's looking at, whether it's flawed or not, like the employment numbers. He's going to stick to his guns. I'm not sure, what his rhyme and reasoning is, but it is what it is, and he's going to leave it at where it is until he leaves office. And that's what I think the street is going to have to start accepting, is that they're not going to have they're going to have a Fed that's going to move rates here and there, but it's not going to be something he's just going to move rates to move the markets, and they're going to have to accept that. And I think accepting that, they're going to be putting on some kind of rate cut tantrum, and we see some kind of very, very quick drop. But until we start seeing support levels taken out, then we just assume that that it's going to be higher. I just think that if we're anywhere near that the 6650 and then the 6700, those are the areas that I think it's going to be. I could even just take this, duplicate it, and put it right here and say this is our red zone here. So this is where you would want to be looking to build short positions, would be up in these levels here. So down here's your support. If they lose it, then we start looking at lower levels. But until really these support levels are taken out, we could just trade within a range. So let's just see what plays out tomorrow. I'm open minded for tomorrow and possibly Friday, maybe even into earlier next week. I think it's going to be very volatile, very choppy. But in the end, I do believe that we're going to have to see some backing and filling that's going to last longer than a few days. So with that, have a great night, and I'll talk to you guys.